NBCC as a chart today. A very interesting name because the stock over the last few weeks has been showing a consistent price uptrend. Now we call this as a classical higher highs and higher lows formation. So from the low or the bottom the stock made at 70 mark, we see this pattern emerging for NBCC where the stock after every major correction has actually come back into a breakout mode, and then the correction has ended. The stock made a higher support with respect to the previous base, and that has led to the uptrend continuing very strong for NBCC. Now the stock has ended a very similar phase of a price correction when it recently came back and corrected towards that 110, 115 range for NBCC. Now I believe that the stock is getting ready for a breakout back again to that previous resistance high. In fact, in the previous legs, whenever the stock has broken past about the resistances, it's moved by a margin of at least 10 points higher from the previous resistances, which means now we could be looking at 130 as a potential break, and beyond 130 we are looking at 140 as the next immediate target for NBCC.
Okay, so those are the levels to watch out for on NBCC, and that's the stock that's looking attractive to Kunal on the charts. But Kunal, other than this, what about some stock specific recommendations that you would like to make right now to our viewers?
So there are a couple of names which are looking attractive. Havells is something which I think has been an underperformer, but I think now the stock could start to make a comeback. So 1650 is a target which I would eye on Havells at current levels, recommending a buy with a stop loss at 1570. And the second would be a buy on CDSL. That's a chart which has again come back into a breakout of a previous swing resistance. So would look out for 1850 as a target, stop loss at 1750.
Okay, so those are some stocks that are looking very good to Kunal at the moment. But on that note, we'll slip into yet another very short break and be right back with more news and updates.